what are the best high dividend yield stocks in telecommunications sector. Hello everyone, welcome to my channel. This is Alex. I hope you're doing well. I hope you are staying safe. I'll call you back. Today we're going to be talking about telecommunication companies and what are the best high dividend yield stocks in telecommunications sector. So I decided to make this video, or a series of videos, where I'm going to be going through different sectors and picking the best stocks, the best high dividend yield stocks on different sectors, so that you can build up your portfolio with a very well diversified stocks from different sectors. I think this is one of the most important things whenever you build your portfolio. So you have equally weighted portfolio on different sectors. You are not exposed to a single sector a lot and have nothing from your, for example, telecommunication companies. Because for some reason, if one of the sectors is performing bad and you hold a lot in that sector, that's your portfolio is going to be performing bad as well. You don't want that happening, right? You want to have different sectors in your portfolio so you are equally exposed in all of those. So that's the goal, and let's get started. Today is telecommunications. I think that telecommunications is actually underrepresented sector in Canada. There are basically 3 to 5 major players in telecommunications, and you will call this oligopoly when a set of companies control the entire sector. And actually it's happening in Canada for a lot of sectors, and telecommunication is actually one of them. But there are still things you need to consider before adding or when picking what to add into your portfolio from telecommunications sector. So let's go through big players first. The first one is Bell Canada, the top, the best, the largest telecommunication company in Canada, period. And Bell is actually a great Canadian stock to hold in your portfolio, especially for dividend investors, because they have a pretty high yield of 6.1%. They're also a dividend aristocrat. They've been increasing their dividends for the last 12 years, which is great, and that's what we want. And they've also been performing very well in terms of market appreciation. And I think right now is one of the best times to invest in this company, just because they're starting to add this 5G networks to all their customers across Canada. And that would be roughly a quarter of the Canadian population. That's a lot. And I also consider Bell one of the top dividend aristocrats in Canada. I talked about that in one of my recent videos. Go and find link here. I'm gonna link it here above. See it here? Yeah, go there. So Bell is the major cash cow, making it an incredibly safe long-term investment. So as I said, the company looks to make 5G available for all its Canadian customers. That's crazy. Basically, the pandemic delayed the 5G boom. That was delayed. And now it's about to arrive. Company plans to double its 5G coverage while also hiking its dividend payouts and confirming the confidence of their investors. They just recently increased their dividends, and they've been doing that for the last 12 years. This is great, and I think right now the company's on that point where they're gonna be going only upwards, just because of all the changes that are happening right now in terms of innovation in telecommunications. So looking at our metrics for Bell, let's take a look. So the market cap is $51 billion. It's great. It's actually the largest telecommunication in Canada. So there's nothing bigger than this that you can invest in terms of telecommunications, of course. The yield is at 6.18% right now. The payout ratio is around 130%, which is fine. They have a ton of cash flow coming through their business, so they definitely can sustain their dividends. The 10-year share price growth is around 60%. The beta parameter is at 0.3, which means that it's pretty safe investment. And again, there's nothing bigger than Bell. All right, let's move on to the next one, which is Telus. The ticker is T.TO. So Telus is a steady telecom company that went through last year's market crash in a pretty good way. So Telus is at the forefront for growth. The $33 billion telecommunications firm is a champion in 3 vital categories over the last 10 to 15 years. Its revenue, earnings, and dividend payouts are increasing consistently. The telco is a dominant force in the wireless industry, with internet and TV services as added growth vectors. Telus has also set a very high bar for customer service that other competitors cannot provide. Telus is also investing in the 5G networks, which is going to be adding to its customers as soon as this year. And with regards to dividend increases, Telus is also a dividend aristocrat. They have increased their dividends for the last 17 years, which is great for us. With this current price, the dividend yield is at 4.7%, which is pretty generous for a company like this, of this size, and considering all the market situation right now. They have increasing their dividends consistently for the last, as I said, 17 years, so it's gonna continue to be like this in the long term as well. So now let's take a look quickly at our metrics. The market cap is around $33.8 billion. The dividend yield, as I just said, is at 4.7%. The payout ratio is around 126%. The 10-year share price growth is at 110%, which is pretty good. We're seeing this consistent share price appreciation over the long term. The beta parameter is at 0.54, which makes this investment a pretty low risk. The next one is another big player, is Rogers. So Rogers is another giant of telecommunications in Canada. It has around 10 million wireless subscribers, and it has some fun to it. So there's another company, Shaw Communications, and Rogers right now in talks of acquiring this Shaw Communications company sometime this or next year, which is going to be a huge acquisition, and Rogers is going to become even bigger than that. The deal has not received approvals yet, but they plan to get it settled sometime by 2022. And Rogers is already the biggest telecom operator in Canada by subscribers base. And after the deal of acquiring Shaw Communications is settled, Rogers subscribers base is gonna be expanded even more than that, which is gonna accelerate the revenue growth for the company. The deal also comes in the right time, when the 5G war between its competitors, Telus and Bell, heats up. Rogers stock offers a stable dividend yield of 3.5%. The stock also doesn't actually look pretty expensive from the valuation standpoint, which means that with these 5G networks and all these acquisitions, I think it's gonna soar in the next 5 to 10 years. So it's a great long-term investment. Once the deal is settled, Rogers is gonna control around 39% of the entire Canada's market. Right now, the company already generates more in earnings than it needs to pay out its dividends. The dividend payout ratio is at 63.9%. The stock trades at 20 times earning per share and offers, as I said, 3.5 dividend yield. This Shaw acquisition isn't done deal yet though, right? So the merger is likely to be approved and completed by early 2022. So Rogers is definitely a stock that you want to take a look very closely. Let's take a look at current metrics for Rogers. The market cap is at $30.2 billion. It's a pretty large company, and imagine what it's going to be once the acquisition is done. The yield is at 3.5%, which is pretty generous, and it's only going to be better on the long term. The payout ratio is 63.9%, which means they still have this cash sitting around that they can reinvest back into their business in order to grow. Currently, the 10-year share price growth is 72%. And after the acquisition is done, if it's done and all that, then they will actually expand even further. The beta parameter is at 0.31, which makes it a very low risk investment. And now for all those investors who actually invested in the Shaw Communications company and hold them right now, I think its dividend is going to be not sustainable and not predictable for the next year or two because of all this acquisition nonsense. I cannot tell you what to do, but I'll nod very fast if I think that Shaw stocks shares are not the best investments right now. Anyways, I think you will be better off if you find some substitutions to your Shaw Communications stocks right now, and you can substitute it with other telecom stocks that we talked about today. There's one more actually to look at, which is Quebec, and it's actually pretty good in terms of market appreciation. Let's take a look. Some of the best and most successful companies are the ones that are rooted deep into their home community, and Quebecor is one of them. This is a Montreal-based media giant, and it has three primary businesses: telecom, media, and sports entertainment. It's also a dividend aristocrat. It's been increasing their dividends for the last 6 years, with a dividend yield of 3.3%. But one thing that sets Quebecor apart from other dividend aristocrats is dividend growth rate. Since 2017, the company has grown its dividends by 12.2 times. Crazy, right? Let's quickly take a look at the metrics for Quebecor. The market cap is around $8.9 billion. The dividend yield is 3.3%, which is pretty generous for a company like this, and considering all the other competitors in this sector they have. The payout ratio is crazy sustainable, it's at 32%, so they're still investing a lot into themselves in order to grow their business. The 10-year share price growth, hear me out here, is at 310%, which means it's a great share price appreciation stock that you can hold for long term and also benefit from the share price growth. The beta parameter is at 0.32, which makes this stock a pretty safe investment. So these are the telecommunication companies that you want to consider adding to your portfolio in order to diversify it from other different sectors. I personally hold Bell and Telus in my portfolio, but I also consider adding Rogers in the nearest future just because of all this recent news of the Shaw acquisition. I think this acquisition is going to play out really well for shareholders of Rogers. So I'm going to be putting some money into them for sure. It's also good to diversify within the sector and have multiple companies from the same sector in your portfolio. And that's it for today. I'm going to be adding more into this series of best high dividend stocks by sector. The next one I think is going to be utilities. So see you around there. Like this video, subscribe to my channel, and I'll see you there. Bye.